I almost got stopped out on this trade, not because my setup was wrong, but because my stop loss was too tight. My name is Bai. I document every trade I take, wins and losses, as I work towards consistent profitability. In this video, I'll break down this USD JPY trade I recently took in my backtesting exercises, where managing my stop loss made the difference between getting taken out and letting the trade play out. First, we'll review the higher time frame bias and the lower time frame entry model. And then finally, the lessons that this trade taught me. Let's jump into the chart. Okay, we've turned the clock back to just before New York morning hours. And we can see on the 15-minute here that we are bullish. We have a swing high, we retraced, and then had an aggressive move up and then created a new swing high right here. We've since been retracing down the leg and have entered the discount area of the bullish leg. If we jump to the 4-hour time frame, we can see that a huge fair value gap was left by this aggressive move up a couple of days before. We've taken out much of it, but a piece still remains. And so I want to denote that with the green box so I can acknowledge the remaining liquidity and orders that may remain in this portion of the fair value gap. Back on the 15-minute, we can see the green box, and we can more importantly see that it coincides with London low, another key area of liquidity, giving us more reason to believe that price will continue down. And if we can see a 1-minute market structure shift, perhaps price will rally to realign with the 15-minute order flow, which is bullish. As New York morning hours open, let's play price forward to see what we can find. A red folder news event pushes price down into our zone. Price doesn't close below it, which is a key distinction here, giving us permission to drop to the 1-minute to see if we can find an entry model. Here on the 1-minute, we can see the mitigation and the subsequent volatility following the news event a lot clearer. I want to identify an area where sellers stepped in and aggressively pushed price down. If I zoom into the 1-minute, I can consider this orange line as the last level where sellers stepped in to aggressively move price down into the 4-hour fair value gap we had marked up. Notice the fair value gaps that are created between these candles pushing us into our key point of interest. Now, following the news, buyers stepped in aggressively, but were unable to break above that level. Sellers stepped in again and pushed price further down, but buyers seem to be putting up a fight and resisting the urge to bring price lower than this 4-hour fair value gap. Let's play price forward to see if we can observe buyers stepping in and pushing and closing price above this orange line on the 1-minute. It took some time, but around 10:45, price is able to close above our orange line, which remember was the line that sellers last showed conviction in moving price down. Notice the aggressive move by buyers across these 8 minutes that helped move price and close it above the orange line. There's fair value gaps and there are very few, if any, down candles, telling us that buyers are rallying and pushing up aggressively. At this point, we'll drop to the 5-minute to see if we can find an entry. Here on the 5-minute, I see this fair value gap that I'm going to target for an entry. For a stop loss, I have to be careful. I don't want it to be too close to any equal lows like I see here. Rather, I'm going to target this low as my protected low. While we do have a further low to the left, I see this as a manipulation candle. And so if price were to go past this level, it suggests that it's going to go further down. So in order to optimize my RR, I'm going to set my stop loss to this key level, place my entry at the fair value gap, and target a 3R trade as I normally do, which takes me nicely into this cluster of orders before the aggressive move down as a draw on liquidity. Let's play price forward to see what happens. Price tags me in around 2 p.m., but as we enter the end of New York session, price is very much still hovering around my entry. And so I need to make a decision on how to manage my overnight trades, since I won't be awake during Asia and London sessions to actively manage. And so I have 2 options. I could move my stops to this area or this area here. I'm reluctant to do either because this first stop loss option is very much close to my price action. And I want to give enough room for price action to do what it does without stopping me out. This other stop loss location is very close to the equal lows I had observed initially when I set up the trade. And so setting up my stop loss there doesn't make any more sense than it did then. And so I want to choose to leave my stops where they are, sticking to my original thesis that if price is going to hit this stop loss, chances are it's going to go further down. And so I want to be out of my trade because my thesis is wrong. With this logic in mind, I'll play price forward, knowing that I'm going to go to bed and not be able to manage through Asia and London sessions. Let's play price forward to see what happens. And we can see that at the beginning of New York session the next day, price hits our take profit. However, the learning is if we look to our left, if we zoom in, we can see that price actually ended up coming down and taking out that first stop loss option we had to collect liquidity before moving up. Now, although it didn't touch our second option, it very well could have. And I think leaving my stop loss where it was an important decision that made sense at the time. Regardless, price moves up and we get our take profit using logic as our guide in trade management versus emotion. The key lesson is this: a smart stop isn't the tightest stop. It's the one that makes the most logical sense, especially during overnight sessions. Because managing risk isn't just about reducing loss. It's about staying in valid trades. This trade reminded me, if your analysis is right, your stop needs to reflect that too. I'm not a guru. I'm just someone documenting my journey towards consistent profitability using market structure, liquidity, and price action analysis. If this breakdown helped you see the charts differently, then subscribe. And if you want to see another trade breakdown just like this, then check out this video right here. Every trade teaches me something different. And this next video might show you something you never noticed on the charts before. I'll see you there.